Larry, welcome back. What a great way to put a bookmark on 2024 talking to you today. How are you?
Dale, great. Thank you for having me on.
Yeah, so Larry, I we probably would have less to talk about if I just asked you what aren't you buying, Larry?
That's a pretty good question. Uh, I'm right now, so I'm long stocks, bonds, gold.
Yeah, right, that's what I mean.
I mean, everything is trending higher, so I'm pretty much long.
Yeah, okay. All right, so you have a view on you're showing the yields here. You have a view of where they're way under all the moving averages. You would look at this and say trend is down and looking for continuation, right?
I am. So I agree with a few of your other speakers that the trend is down. I don't see bond yields going back up unless there's some really big outlier, maybe geopolitical, maybe if something happens overseas and we need to raise more or issue more debt. But right now, inflation, so the Fed uses PCE, headline PCE
Right.
is the Fed's inflation target. The quarterly forecast from the Cleveland Fed, 1.79. So CPI 2.7, core at 3.3, but whether it's 1.7, 2.7, or 3.3, it doesn't really warrant the Fed holding at 5.25 to 5.50 for the overnight rate. So I think the Fed eventually has to cut. Now I'm not sure how much is priced in because tens have already come down to 381.
Yeah.
But I think that the trend by looking at the chart is lower. There's a lot of support 325 to 350 on the 10-year chart, but
Yeah,
I'm
I'm looking
long
at
bonds and I'm long gold, which should
yeah.
benefit from lower bond yields.
Okay, they've both been performing bonds and gold and equities.
Yes.
So still, it's still all one market, Larry. So I really think, you could say it's yields, you could say it's a dollar. I actually think the dollar, we were talking about this today, may have completed its first wave down from the highs. You use UUP up there at 28.35, and that we're going to correct this recent decline here.
Right.
Um, that may mean, stronger data. Maybe yields bounce a little bit, or uh, but I do think we're going to take out the lows of last year, just not yet. Looking for about a 2 to 4 week recovery in the dollar. You think that would upset your positions if the dollar, say, right now I'm looking at the Dixie at par 80, par 90, say rallied back up to near 105?
Not too much. And I
Okay.
think you're right. So I'm expecting maybe in the first week or the second week of next year, I am expecting some type of consolidation because the S&P 500 is going on higher for 9 weeks in a row.
Oh,
So is
three
the
threes. Yeah.
Yeah, so is the Nasdaq 100
Yeah.
bond. So if there was some consolidation, I don't know, 3 to 5% pullback in the indices. I don't think that would be abnormal whatsoever. I mean, we're up 9 weeks in a row, so almost 700 points off the low. At some point, there needs to be some consolidation. I mean, we're not going to go up every single week, but I'd like to see any pullbacks on the S&P. I'd really want to see them stay over 4550 to 4600,
Yeah.
somewhere in this range. But I do think that these trend breakouts that we're seeing on the S&P 500 and the Nasdaq 100, I do think that these moves are going to hold overall. The Fed,
Yeah.
so the Fed came out November 30th in 2021, right up here. Powell came out and said, it's going to get tougher and there's going to be no more easy money. And they shifted to a tightening bias. And we see what happened to the markets. But now he came out 2 weeks ago and basically said, we are done raising interest rates. We're going to cut interest rates. And I think that the market is going to resolve overall to the upside.
You have any, I know some guys are talking 6,000 in the S&P. Do you think that's aggressive?
Oh, over what time frame? That's the
The
thing.
first half of that we're in a melt up, and this looks so far looks pretty parabolic to me. That everyone that's waiting for a pullback, it just doesn't happen, and we just keep melting up into the
Six
for the
six
first
thousand
quarter.
6,000 seems pretty aggressive.
Yeah,
But what I'm looking at, everyone's focused on this and saying, okay, we've gone from 4,100 to 4,700 in the short term. But I'm looking at the fact that 2 years ago we were 4,800. We went through the entire Fed rate hike cycle. Now they're going to shift to cuts, and they are going to cut, whether it's in January or March. I don't know. But if inflation, and I don't think inflation is gonna move way back up to the upside. So I'm treating this 4,800 right where we're at as the potential starting line for the base breakout. But 6,000 seems pretty aggressive.
well, I don't know. Why don't you go like 4,800 to 3,500, which is the whole range you're talking about? I mean, if I really want to use a telescope,
Yeah,
and you
complete.
think 4,800 is a breakout, then you are talking over 6,000.
Yeah, because then you're talking about what, 1,300 points here,
Yeah,
add 1,300 to that.
yeah,
I don't, I'm really good at reacting to what's on the chart right now. I'm not too great at
yeah.
predicting, 6 months down the
Well,
road.
you know what? That's how you make money. The other stuff is
Yeah.
entertainment.
I just listen,
Entertainment
I
value.
just I just want to get it right, right now. If we're at 6,000 at the end of next year, that's great. But I'm not building 6,000 into my expectations. If we're higher 8 to 10% on the S&P in 2024, I'll be very happy because I think that I can find a lot of stocks that will significantly outperform the S&P if we're higher.
Yeah, there's Alcoa just starting to come out of here.
Yeah, there's a lot of these stocks. So Alcoa went from 96 to 22. Here's the thing. If the Fed starts to cut interest rates at some point, which they probably will, because they've said they will, and the futures market's pricing it in, then a lot of these stocks that really got killed in a tighter monetary environment, some of these small caps,
They're
maybe
down
stocks,
70%.
yeah, maybe stocks that aren't capitalized too well. I think there's a lot of potential upside, in a stock like Alcoa, some of these cyclicals, some of the industrial. So if the S&P is just up 5%, 8%, 10%, whatever it is in 2024, I think we can find a lot of stocks that'll do significantly better than the index.
Yeah, they say that the more highly indebted leveraged companies are railing the most because of all the pressure coming off of their balance sheet.
Sure. I mean, look at solar.
Yeah.
Right. Enphase 340 to 73. So this is the week when the Fed coming out of right here is when Powell said we're not going to raise rates anymore. And the stock went from 100 to 130. I think that the small caps and the mid caps, because there's a lot of stocks that, aren't very well capitalized, I think that those will perform better. I like the cyclicals. I like the industrials. You've got stocks like GE's not exciting, but it's breaking out. And some of these stocks are pretty cheap. I still like tech. I still like, NVIDIA and Facebook, but I think that I don't expect them to outperform. I expect the other 490 stocks could do a little bit better than the mega caps in 24.
How about the oils? They're kind of a group that's been left behind.
You know,
Relative weakness,
there's
probably
three
not in them.
charts that I like. So I like Phillips 66,
Yeah.
Eco, Petrol down in South America, and Petrobras. That's a great chart.
Brazil.
Overall, the group, I think oil found some long-term support in the mid 60s.
Yeah.
So 67, 66, 65,
Yeah.
70, look, 65. So there's a ton of long-term support for WTI from maybe 61 to 66. That's where it's held. But it's not my favorite group. It could do fine. Generally, crude oil has been pretty well correlated to the 10-year treasury. So we can see when 10-year treasuries backed off, crude started to back off. But I don't love it as a sector, but it could do fine.
You know what's due, and I saw it had a few issues that I keep on my screen, seem to have a heartbeat, and they've been decimated for the last 3 years, are the cannabis stocks.
Yeah.
I figured you'd see that heartbeat.
Yeah. I think the only thing, what surprises me is the cannabis stocks have not had any type of a move like these crypto stocks have had.
Oh my God, yeah.
So if we're talking
Mara,
about,
yeah.
the lower quality stocks. Now here's the thing. I'm a big believer in the January effect.
Okay.
So I'm a believer that last year's big losers can become, big winners. And we saw that last year, on January 1st, right, in 2023, it's like they rang a bell. So you look at Shopify, right, 32 to 78. A lot of these stocks like Roku and Shopify, and a lot of these stocks that really had a horrible 2022 are up triple digits in 23. So it's possible, with these
Even
cannabis.
ARK isn't up triple digits, is it?
Big, 70%.
Okay, ARK.
I mean, look, the dead
She's
low
a
was,
hero now. She's a hero now.
yeah, it depends if you bought it at 125 and you're
Yeah.
down, 60%, or if you bought it at 30. But the thing is, once that calendar flipped, I mean, it was like a brand new chart for these stocks. So the cannabis stocks, I don't follow them too closely, but I would look for, if they start to take off like these Bitcoin stocks, then that could help.
Sure, long-term basis there.
Big. Yeah.
Yeah.
Well, I'm looking at that. If, for me, I would want to see that chart realistically get over $10. And that seems like a far way away.
Yeah.
But it was
Could do it
55.
in a few
So
weeks. Yeah.
yeah.
All right, Larry. Uranium. It's had a good run this year.
Uranium, little bit of a pullback recently, but it's been super strong. It's got a really nice price base right where it is. So, the trend, me, the trend is still up. Now,
They look
CCJ has been a
vulnerable.
little bit weak
Yeah.
ever since this, but here's the thing. CCJ was doing great when a lot of these other small cap stocks were really getting killed. So I just think you're seeing a healthy rotation where you've got fund managers that are looking at stocks that they made, 30, 40, 50% in, and just reallocate into some of these cyclicals like the small caps. But uranium, it's still an uptrend, so that's good.
Okay, let's see the golds you like. And we'll get back to the Russell. So, some people are talking about the Russell doubling. We'll get that kind of talk. But
Yeah,
you're
you get a lot of talk, but I will say this. The big number for the Russell was 198.
Yeah.
Because it failed 3 times over 198. Now, the last time it had a breakout move over 162, it went to 236. So maybe a 50% move. I don't know, Dale. A lot has to do with how the economy holds up. Jobless claims came in today, 218 versus 210 estimates. So no, nothing major. Maybe, and I try not to get into the hard landing, soft landing. What I want to do is try to, avoid as many opinions. Just look at the chart and react to what's on the chart. But I think what happens with the small caps, maybe Powell gets it right. maybe they start taking their foot off the gas and they avoid the recession. I don't know, but I like this small cap chart over 198.
Yeah, definitely. Yeah. I mean that it was classic how they broke down and it was a false breakdown at the lows in late October.
It's,
Uh,
Dale, it's a big deal that Powell came out. Listen, I follow what the Fed does every single day, right? Because you have to. I mean, in this market, you have to. I did not expect them to come out at all a couple weeks ago and say that
yeah,
they were done. I didn't expect it. And in 2018, when the market was really selling off, Powell came out. It was
yeah,
December 20th or so, and he said, we are done. We hiked 8 times. We're done. And the markets took off. So I don't know that happens again, but I think it's a very big deal that he came out in December and said we're done raising interest rates.
okay, yeah, you know, interesting that it happened during an advance, not at the lows. So that was a little different too. It wasn't an inflection point like it was in 2018
But
when they're
yeah,
making
that's
lows.
true.
I
Yeah,
mean, that's the only thing that was kind of strange to me. The market wasn't under duress when he
now
made that
now listen,
announcement.
they might see things in the economy that we don't know about where they think the economy could be getting soft enough that they need to come
Right.
out and make that announcement. But I really think at the end of the day, the key thing is that if inflation, because PCE, I think it came in negative, right?
Yeah.
The last report, month over month PCE came in negative, 10 basis points. The month before it came in flat. So at the end of the day, if inflation is in the 2% range, 2.5, whatever it is, you don't need the overnight rate at 5.25. And I think that's what they see. And maybe they do see some weakness. I mean, we don't know what happens
Yeah.
with the economy, but I just think the fact, I know when he said that they're done hiking interest rates, I just started to buy things.
Right. Well, you know what, Larry, you are excellent at having a fundamental overview, but not letting that affect your trading judgments. That you need technically, you remind me of Steve Volge, who's, Mr. Confirmation here at ForexAnalytix. And he may have a bias or he tends not to have a bias until something technically tells him to. Where a lot of us will start to trade our bias before we have confirmation and get into trouble that way. So, um, I appreciate you being able to talk about the Fed and also say it's all about price action when you're making trading decisions. So that's you know, you're a pro, Larry, and I tell you what, I really appreciate uh, the years we've been talking to each other. What, 3, 4 years now, buddy?
Yeah, it has been at least 3 or 4 years. And
Yeah,
and I love to come on your show because you're dialed in to what's going on in the markets, and I always know we're gonna have a good talk.
yeah, and I want to thank you for your contributions in edifying our community every time you come in. You just give us the straight dope and what you're seeing in the markets, and you have your fundamental backdrop, and you bring our attention to certain issues that without you having been here, we weren't paying attention to. So, want to thank you for that, Larry, and hope that 2024 is your best year ever on all levels, not just the markets, but on all levels. Thank you,
Dale,
my
you
friend.
too, my friend. Thank you so much. I hope you have a great 2024 as well.
Yeah, and look forward to speaking to you in the spring, and that'll be that time frame where uh, we're going to see manifest what we were talking about today.
Exactly.
So, yeah, so good hunting, Larry. Thank you so much for your giving spirit to come hang out and face every 3 months or so.
Dale, you too, my friend. Thank you.
All right, Larry Tentarelli, best place. Oh, Larry, before you go, I notice you have a handle change on Twitter that it's
Yeah,
not
so
ML.
everything
Go ahead.
everything for me is Blue Chip Daily. So my website,
Okay.
bluechipdaily.com, on Twitter, at Blue Chip Daily,
Okay.
YouTube at Blue Chip Daily. So that's where you can find me. I'm on Twitter every day.
Okay. So reach out to a pro, and Larry is one. So thanks, Larry. People enjoyed it, and everyone have a great day. Take a day off and get ready for next year. That's my advice. Thanks again, Larry, and everyone else. We'll see you tomorrow to wrap up a little Old Lang Syne tomorrow. You're welcome, Patrick, Arnis, all you guys. Good luck. Don't just count your money, count your blessings. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.